what is the Fed going to do? Well, first of all, if you look at the interest rate markets, the 50 basis point hike that at one point was, I think, about a 60, maybe 70% probability. So it was the most likely scenario that investors were anticipating. That is pretty much completely off the table. So nobody thinks the Fed is going to hike by 50 basis points in March. So that's gone. They're only going to do 25. And in addition to that, all the talk about, 8, 9, 10 rate hikes in 2022, well, they're already off the table. So the markets are already anticipating fewer rate hikes than they were anticipating a week ago. So in other words, the Fed has eased policy based on what the markets are anticipating, but inflation hasn't eased. If anything, the inflationary pressures are picking up. So inflation is going to be worse, and that is bullish for gold, and real interest rates are going to be even lower because the Fed is going to take longer to raise them. But the real problem is the Fed may never even get around to raising them at all. Because what if the markets do collapse between now and March? What if the U.S. economy tips into recession, which obviously what's going on in Russia and the Ukraine, the effects that it may have on the global economy, the U.S. economy more specifically, and consumer prices, which were already rising before this conflict and which are now going to rise even more. If the economy is teetering on the edge of recession, if the stock market is in a bear market, which clearly we have a whole month to go, we can be in a bear market across the board in the stock market. Is the Fed really going to start hiking interest rates into a bear market? Because if you go back and look at the previous cycles, we didn't get the bear market until after the Fed had hiked rates several times. The Fed starts hiking rates when we have a bull market. It's almost like the Fed wants the markets to bless the rate hike. So it doesn't actually start hiking rates until it's convinced the markets can handle the hikes. And then what happens is once it basically gets the signal to hike, it starts hiking and it keeps hiking until the markets break. And then when it's a big enough drop, well, the Fed calls it off. Well, they can't do that this time because we went into a bear market, at least in the Nasdaq and the Russell 2000, but we could be in a bear market in the S&P very easily by the March meeting before the first rate hike. The Fed was able to cause a bear market simply by talking about raising rates in the future. Well, now what are they going to do? Stop talking about raising rates? Maybe that's going to be monetary policy in the future. If rates are always at zero, what do? You can't cut them. And then if you can't raise them, all you can do is talk about raising them. And that's going to constitute tightening. And then when the markets tank, well, then you stop talking about hiking rates and that's easing. But what they're going to have to do is launch another round of quantitative easing. Because if the markets are tanking and all you do is stop talking about raising rates, but you haven't actually cut rates, is that really going to be enough to reverse a bear market? I don't know. The Fed has never been in this predicament before, but this is the natural consequence of what they've done. Because every time we arrive at a new crisis, we have more and more debt. And that means each time when the Fed tries to normalize rates, it stops at a lower rate because the economy can't handle a rate as high as it could before because it has even more debt. And it looks like at this point, the economy is so levered up with debt, we couldn't handle any hikes at all because the markets broke simply on the talk of future rate hikes. So by the time the Fed actually gets around to doing what it talked about doing, we're already in a bear market and the Fed is already in the position where it would normally start cutting rates and it hasn't even raised them. But any way you look at that, even if the Fed does get around to hiking rates, but there are fewer rate hikes than the markets have anticipated, and the Fed has to reverse course sooner than the markets had anticipated. All of this is extremely bullish for gold.